Hello, I'm Don Nasca with Medicare Self-Help. This video will clarify Medicare Supplement Insurance, an extremely important Medicare coverage option that is not well advertised. Advertisements about Medicare Advantage always compare Medicare Advantage with Original Medicare. Of course, comparing these two always results in a no-brainer choice for Medicare Advantage. However, your choice is not limited to Original Medicare versus Medicare Advantage. What is blatantly missing in all Medicare advertisements is the comparison of Medicare Advantage with Original Medicare combined with a Medicare Supplement Insurance Plan. When comparing these two choices, the advantage of Medicare Advantage is greatly diminished. In another video, I will do a detailed comparison of Medicare with a Medicare Supplement policy versus Medicare Advantage so you can make the best informed decision possible. First, you need to clearly understand all the Medicare supplement products that are available to you. And second, you must understand your limited time frame guaranteed rights so you don't unknowingly lose your guaranteed rights and suffer a very costly mistake down the road. This picture is a snapshot of how Medicare with Medicare Supplement Insurance works. We all pay taxes into two Medicare trust funds out of every paycheck over our entire working lives. When we are enrolled in Medicare Part A and B, and we get ill and treated by our provider of choice, Medicare pays our providers an agreed fees for their services. That fee covers about 80% of your bill. While 80% is a nice benefit, at today's cost of medical care, most seniors would end up in serious debt or even bankrupt without some additional insurance coverage. A Medicare supplement plan is simply an insurance policy. You pay a monthly premium, and the insurance company pays the benefits you selected, which will cover most, if not all, of the 20% remainder of your medical and hospital bills. You'll find this chart everywhere you look for Medicare supplement plan information. It is important to note that every insurance company must offer the same benefits. So, for example, buying Plan G from Company X will be identical to Plan G from Company Y. This chart shows you what is covered by Medicare with a Medicare supplement plan. I will first give you a brief description of what each of these benefits actually are. With Medicare alone, the coverage for hospitalization is 80%, and you would need to pay the Part A coinsurance with 20% of the bill. If you are like most people, we are not so concerned about the occasional need to visit our primary care physician. It's suddenly being diagnosed with a serious illness that will require long stays in the hospital or expensive procedures and treatments that we are actually worried about. The beauty of Medicare supplement plans is they all pay 100% of the 20% Part A coinsurance, so your hospital bill is paid at 100%. Medicare coverage for medical expenses is 80%, and most Medicare supplement plans pay the full remainder. Again, your bill is 100% paid. I'd like to point out the two odd plans, K and L, which offer a maximum out of pocket. Remember, Medicare pays 80% of your bill before the supplement pays their share. So using Plan K, for example, a $1,000 bill would have $800 paid by Medicare. Then Plan K would pay 50% of the remaining 20%, which is 10% of the total bill. Your bill would be $100. You would need $66,200 in medical bills to hit the max out of pocket. Hospice care is the extra care provided to us when we are terminally ill. Skilled nursing facility care is not long-term nursing home care. It is the care provided when we are recovering from an injury or illness and not quite ready to go home, so ill that we would continue to require a hospital bed. The Part A deductible is what we pay when we're admitted into the hospital. If we leave the hospital and need to return again after 60 days of being home, we would need to pay that deductible again. Part B deductible is an annual deductible that will be applied on our first medical bills that we receive from our doctors or for things like imaging, laboratory tests, and medical equipment. Part B excess charges only apply to doctors that do not accept the Medicare assigned fees for their services. Approximately 10% of doctors choose not to participate in Medicare and may charge you up to 15% more than the customary Medicare-approved fee. The first thing to do is to contact your preferred medical providers and ask if they accept Medicare assignment. You might find some doctors are not, or they may only be accepting Medicare Advantage, which is a major barrier for people who either do not want to change doctors or have limited choices in their area. Your doctors may accept a Medicare assignment today, but this also could change in the future. If your doctor does not accept Medicare assignment, they can also bill you up front for any deductible or coinsurance versus first waiting for Medicare to pay their share. Also, the excess charges do not count towards your Part B deductible. Foreign travel is simply coverage for emergency medical services while you are traveling outside of the USA. It only covers emergencies during the first 60 days you are abroad, and there is a $250 deductible. I already covered the max out-of-pocket for Plan K and L. I'll just mention Plan G high deductible has a $2,490 annual deductible. And while this may seem high, there is a big advantage to choosing this plan for some people, which I will discuss in a few minutes. This chart simply reverses the percentages from the benefits paid to the benefits you will have to pay for any plan other than the most benefit-rich Plan G or G high deductible. It is helpful to look at the cost for choosing lesser benefits of the available plans versus looking at the larger chart in the previous slide with all the plans and percentages covered. I removed plans C and F since new enrollees cannot purchase them. This chart shows the viable alternatives that offer fewer benefits than Plan G or G high deductible and the approximate savings and lower premiums. Savings are estimates based on a wide range of premiums for plans available during fourth quarter 2021 in the Clark County and Portland metro area. Read the slide for more details. Now you should have a good understanding of the different Medicare supplement plans, what is covered, and an idea about the possible savings in premium for each plan compared to Plan G or G high deductible. I can provide you with an exact quote for any plan you are interested in from a wide variety of carriers. Unfortunately, there is more to making the decision to enroll in a Medicare supplement plan. The next slide is the most important, as it will explain the most important right we have, called the guaranteed right of issue. This is an extremely important point to understand that is rarely highlighted in any Medicare marketing materials. Not understanding this point may permanently impact your ability to purchase a Medicare supplement plan. Once enrolled, you have a guaranteed right of renewal for life as long as you make your payments on time. And unlike Medicare Advantage, your benefits will not change and the insurance company cannot deny any claims. If Medicare pays their share, your Medicare supplement plan pays their share with no questions asked. First thing you need to understand is you have a one-time only 6-month enrollment period that starts the first month you are enrolled in Medicare Part B and you are over 65 years of age. This open enrollment period is unlike any other because it's the one time you are absolutely guaranteed the right to purchase a Medicare supplement policy without any health questions. This is called a guaranteed right of issue. If you do not enroll during the one-time open enrollment and you have been diagnosed with a chronic or serious condition, the insurance companies have the right to deny your application. Every insurance company has their own questions and underwriting process. There are exceptions which will allow you a brief 2-month window by which you must exercise your right, and 2 exceptions that are valid for 12 months while you try Medicare Advantage called a trial right. I won't read all these exceptions, but please be aware of them and refer back if needed. If you've missed your open enrollment period, or you've let your coverage lapse for over 63 days, or you stayed with a Medicare Advantage plan for more than 12 months, some pre-existing conditions, namely chronic conditions, can be the cause of denial of a Medicare supplement policy. This is not a complete list, but examples are shown here. Here are some special rights in Washington state which don't apply anywhere else. For pre-existing conditions, assuming you were not denied for a chronic condition, if you were purchasing a Medicare supplement plan after your initial 6-month guaranteed rights period, or you've allowed your Medicare plan to lapse over 63 days, or you've used up your 12-month Medicare Advantage trial period, you will be asked health questions, and the carrier may apply a look back and a waiting period to delay your coverage. If you live in Washington and have a pre-existing condition, the insurer can only look back 3 months before the effective date of your new Medicare Supplement plan and only exclude benefits for that condition for up to 3 months. Insurance carriers in Washington and Oregon are either accept or reject application states, meaning they won't be able to charge you more for pre-existing conditions. They can only accept or deny your application. And if they accept you, you get the same. Medicare supplement plans can be switched. In Washington, it's absolutely incredible because you can switch anytime for any reason to any plan except Plan A without a health screening. So if you've been covered by a Medicare supplement plan for at least 90 days, you can upgrade or downgrade your plan at will. This is a very incredible benefit not available in most of the states. Also in Washington, if you're losing or replacing other more comprehensive coverage, such as your employer plan, that was in effect for at least 3 months or 90 days, you'll have no waiting period for any pre-existing conditions. You must enroll within 63 days of losing your prior coverage. Now let's move to Oregon. The same conditions, again. So if you've lost your guaranteed rights because you've done one of these things that you weren't aware of, or you let your policy lapse, you didn't apply during your 6-month open enrollment period, or you've been in Medicare Advantage for more than 12 months, you will be asked health questions, and the carrier may apply the look back and waiting periods. There is a carrier that I know of that will not ask you these questions, but it's a company policy and not a guaranteed right. So policies can change, and I just want to make folks aware of that. In Oregon, the look back and waiting periods in months vary from insurance company to insurance company. Some don't look back at all and don't apply any waiting periods. Others want to look back 6 months and delay your coverage for 6 months, and some combination of something else in between. Switching Medicare supplement plans in Oregon, there is a rule that's helpful, not as good as Washington, but you do have a 30-day shopping period that begins on your birthday, regardless of your health. You can switch to any available Medicare supplement plan in your area. The catch here, though, in Oregon is it has to be the same or lesser benefits, so you cannot upgrade your plan, which is unfortunate. So the thing to remember in Oregon is you shouldn't just initially choose a low premium plan to save money in the short term, because you may not be able to switch later to a richer benefit plan, and you might really need them because of pre-existing conditions. Some Medicare insurance carriers offer an innovative or extra benefits not contained in standardized Medicare supplement plans. These extra benefits can include, but are not limited to, 24-hour nurse advice lines, gym memberships, annual physical exams, discounts on preventative dental care, preventative vision, routine hearing, and drug discount cards, for example. Now that you understand your Medicare supplement options and your guaranteed rights, you still have to choose the carrier that best fits your needs and budget. Besides the quoted monthly premium, you should consider these other factors. And I'll just read some of these because they're important, namely price stability. The lowest price is rarely the most stable. Companies trying to enter a new region may initially offer low prices and raise prices significantly in later years. The issue is most seniors simply pay the higher rates later without asking an agent to review their situation. And history serving the area is another important point. Insurance carriers can jump in and out of markets. If a carrier is new and not successful in competing in the market, they can pull out and drop you. You would have to then find another carrier. There's a wide variety also in caliber of customer service agents, their ability to respond to your claims quickly, your questions and concerns. We all know what it's like to be on the phone with some insurance companies, so it's a consideration worth thinking about. But in the end, my point I'd like to reiterate, the major consideration is your guaranteed right of issue, something, again, that you almost never hear about in any marketing advertisement. So review my slides again, understand your rights and the potential impact of not and understanding them is crucial. Let's face it, if you don't know your rights, you can't exercise your rights. If you don't exercise your rights, whose fault is that? So I'll leave it at that. Before you enroll with any carrier, please contact me for a personalized plan. Cost you nothing. I'm happy to do it for you. I'd like to take this moment to highlight one of the Medicare supplement plans available to you. It is the high deductible Plan G. You will see very little, if any, marketing for this plan because it's the best kept secret in all of Medicare. You get all the same benefits of the most benefit-rich Plan G with a very low monthly premium. The annual deductible for 2022 is $2,490, which makes this plan a financially viable alternative. You can think of it like your home or auto insurance policy. You pay less year after year for accepting higher deductible. Here's a hypothetical example where you only have $500 in medical bills. So let's start with Plan G. In Washington, your premium could be $195 a month. It varies. There are some lower, there are some higher. So you pay about $2,340 a year in premium. If you go to the doctor and you're spending, you have $500 in bills, or at least more than $233 worth, you pay nothing really more than the $233 deductible. That's it. It's a total out of pocket. So it's your premium plus what your deductible was, which would total $2,573 on a $500 medical bill. So obviously you spent a lot of money in premium, didn't need to service it. Now, of course, anyone could argue that it's not a bad thing because you weren't in the hospital and you weren't deathly sick. So you have insurance for a reason. When you need it, it's there. So Plan G obviously is a very popular plan, and folks who don't really concern themselves much with a couple $100 a month, it's pretty much a no-brainer for that population. But not everybody has $200 a month to spare, right? So what else can you do? Obviously, Medicare Advantage has capitalized on the fact that they can offer zero premium plans. Very attractive when somebody tries to say to you, hey, you don't have to pay anything for this. If you don't have any money, that's of course the only way to go. But if you have some money, don't be so quick to jump right in without understanding your Medicare Supplement Plan options. That's the whole point of this video. So let's say you go to Plan G high deductible. In Washington, your premium could be $44 a month. Your total cost for medical expenses, including the premium, would be $528 for the premium and the $500 medical bill because you didn't meet your deductible. It's $2,490. So your total out of pocket would be $1,028, representing a savings of $1,545. That's a pretty incredible savings, right? So if you're in good health year after year, you can save quite a bit of money. Now, if you're not in good health, what's the worst case scenario that can happen to you with a high deductible plan? You get seriously ill and you have tens or hundreds of thousands of dollars in medical bills. The most you'll pay is the $2,490 deductible, which is essentially the same as if you had Plan G to start with year after year. So to me, it makes sense to look at this alternative if you live in Washington. In Oregon, it's a little more difficult. In Oregon, you have lower premiums. Logically, it makes sense to pay for services when you need them and not be paying a high monthly premium when you don't need a lot of medical services. Also in Washington, you can switch at any time to Plan G or any other except Plan A. So there's no downside in Washington. In Oregon, the decision is a little more difficult because all plans tend to be less expensive in Oregon, in your younger years at least, under 80, and thus the savings is not quite as substantial, but you would be financially ahead if you stay healthy for a few years. The other issue, though, in Oregon that we have to think about is Oregon only allows you to later switch to a lesser or equal plan, and there is no other plan to switch to other than another carrier with Plan G high deductible. So in Oregon, you will keep this plan for life unless for some reason later you decide to switch to Medicare Advantage. Now I want to close with one last special slide. A reserve fund annuity is another one of those hidden gems that you may never hear about. A reserve fund annuity is an amazing product that is unlike any other annuity or savings vehicle. The idea is to use it as a savings account that earns 3% guaranteed interest. So for example, you go with a Plan G high deductible, but are worried that you may get very ill and need to pay that $2,390 deductible. Well, if you save some money on this account or in this account, you can withdraw it for any reason at any time without any fees or penalty. You only pay income tax on the interest you earned. With banks offering a miserable 0.1 to 0.5% on your savings, this is paying you 3%. I don't make one penny on this, but it's something I want everyone choosing a Medicare supplement plan to know about. Here again is my contact information. My website has a button to set up an appointment. So if you go to my website, MedicareSelfHelp.com, you just click a button and you can pick a date and time that's convenient to you for a conversation with me, no obligation, and I'll be happy to create a personalized plan with any option available to you. You can also call or email me, obviously. If you place your phone's camera over this symbol here, you'll get a link pop up, and you just click on that. It will take you to my website. You can watch my other videos. You can set an appointment. You can send a contact form. Thank you for watching and taking the time here to listen to what I have to say about Medicare supplement plans. I hope you found the video informative, and if you did, please share, like, and subscribe. And most of all, I'm looking forward to hearing from you and being able to discuss in more detail what your options are and what the costs of the various plans are. And again, no obligation. I just do this to help folks find the right plan, because this is our final medical coverage system that we'll have in life, and it's impacted my life for sure. And I'd like it to be very clear to anyone else out there turning 65 or who might be covered by Medicare or some plan and have some interest in learning about other options. Take care and look forward to hearing from you soon.